Welcome, dear traders. How will certain banks adjust their interest rates, and how will the world's leading economies react to these adjustments? The answers to these two key questions will likely affect stocks and currencies. Markets are trying to find the most important clues in today's statistics. Yesterday's reports from the US showed a 0.1% decline in consumer prices on a yearly basis. At the same time, US inflation rose by the same 0.1% on a monthly basis from October. The core CPI added the same amount in November. As a result, we have a consumer price level of 3.1% and core prices even higher at 4%. Both are still not in line with the Fed's 2% target. And when you add the growing US labor market and higher wages, the Fed's decision becomes even more difficult to make. What will the Fed decide today? The majority of the market, 98%, is confident that the regulator will keep rates steady. At least this is the sentiment that the FedWatch tool is showing during today's Asian session. Before the focus should be on Jerome Powell's comments on the summary of economic projections. Since US inflation remains stubborn, this in favor of aggressive rate cuts may be disappointed. US Treasury yields and the US dollar's exchange rate may receive another cross stimulus. That's why yesterday's mixed reports on inflation helped the US currency increase above 104. And today the greenback's price against its six major counterparts consolidates in the range of 103.80 and 103.90 points. Most likely bulls will continue to support the growth of the US dollar until the statement of the US Central Bank this evening. In this scenario, its rate will likely move toward the resistance levels of 100.20 and 104.5. The technical support level is at 103.30. The dollar-yen pair was forced to change its trajectory due to the US dollar strength on Tuesday night and early Wednesday. As a result, the pair not only retreated from the key level of 145, but also approached the 146 mark. Taking into account the fact that along with the US currency treasury yields soared, the yen, which is sensitive to such changes, weakened even more. However, from a technical point of view, the pair still maintains bearish momentum, trading below the mid-November highs in the area of 152. During Wednesday's Asian session, the yen was hovering between 145.10 and 146.10. If the yen sell-off continues, the dollar-yen pair may break through 146 and test the resistance level of 146.5. The technical support level is at 144.90. The antipodium currencies retreated in Asian trading under bearish pressure. The OC was under pressure from several negative factors at the beginning of Wednesday. As a risk asset, the OC fell as the US dollar rose. As a commodity currency, the OC lost ground as oil prices slumped to their lowest level since June. In addition, its Asian counterpart, the Chinese yuan, also weakened following a two-day conference in Beijing. It resulted in the antipodium of the economic targets for 2024, and they are aimed to boost both domestic and foreign demand. However, these decisions are still only on paper. Meanwhile, the agenda of the meeting could not stimulate the market now. As a result, the Australian currency went to the range of 0.6542 and 0.6569 at the beginning on Wednesday. The OC may also test the technical support levels of 0.6522 and 0.6461. However, the OC dollar pair is unlikely to hit yesterday's high of 0.66 soon. Yesterday, the New Zealand dollar's decline took place in two stages. If the first was related to the release of the CPI in the United States, the second was a reaction to the news in the country. And today, the New Zealand government passed a law requiring the Reserve Bank of New Zealand to focus its policy solely on price stability. Previously, the central bank had a dual mandate that included monitoring the labor market, with the forecast for inflation to fall in the fourth quarter The New Zealand regulator has every reason to refuse to raise interest rates further. That's why the New Zealand dollar fell below 0.61 this morning. The Kiwi dollar pair continues to test the two-week lows, trading between 0.6086 and 0.6141. If the US dollar rises tonight, the Kiwi may drop to support at 0.6066 or even lower. That's all for now. Stay tuned for more updates with the InstaForex TV. We appreciate your feedback. Please leave your questions and comments below and see you online soon.